Well, thank you, Raleigh, and welcome everybody. Hope you had a good day in the market today. We did because we were in the sectors that were moving very well, the oils and the golds. So the first question I usually ask everybody before we start is, how many people have seen the presentations or any of my presentations before, just so I know how fast or slow to go on each chart as far as describing what the signals and patterns are. Okay, looks like about six, yeah, maybe 50-50. All right. So those of you who've seen it before, you'll have to kind of sit through a little bit more heavier description of what the signals and patterns are. So the reason we have the capabilities of not only seeing when a reversal is occurring, but also being able to project the targets is because we know with using some simple techniques along with candlesticks that we've got a very high probability analysis of what the chart is going to look like and where the next price move is going to. And so why, I always ask, why is projecting targets important? John, projections differ from bar chart projections a little bit because we have a much more clear analysis of what will happen at those levels, whereas you don't with bar charts. And I'll show you a few patterns as we go through this, how that becomes a much more clear visual analysis. So again, why are projecting targets? First of all, we want to know if the trade is worthwhile. We're going to see a lot of charts, or you can see a lot of charts, where you've got an excellent buy opportunity or buy pattern, but your upside potential based upon where the target is may only be 4%, 6%, 8%. Whenever I'm buying something, I want to look at a chart and know that at least my upside potential is 10% or greater. Now, that 10% is based upon where's my first resistance level, or how much juice do I have left in the stochastics. So the second prospect of why you want to use targets is knowing that if that price move does get to that area, we start watching more closely for when it's time to take profits. So when we're doing a trend analysis, our criteria is the signals, the patterns, which are the most important, where we are with stochastics, and then what are the resistance levels, trend lines, moving averages, what is everybody else watching? And this is the big benefit we have with candlestick analysis, is because the graphics of candlesticks are merely the graphic depiction of what everybody is doing, or what the investor sentiment is doing, or what the decisions are of everybody buying and selling at that level. So we can see immediately whether support and resistance level is going to continue to act as support and resistance. Now, to simplify candlesticks over the years, not to simplify, but it became simplified, that out of the 50 or 60 patterns out, or signals out there, we could narrow it down to what we call the 12 major signals. There's about 12 of them, and we're going to go through them as we go through this. Now, the advantage of that is there's 6 longs and 6 shorts. And not only is the advantage of recognizing the signals important, but because the Japanese rice traders had used this so successfully through the last 400 years, not only could they help you identify the signals and patterns, but they could tell you what the investor psychology was that created those signals and patterns. So when you have that combination, you now have the visual analysis almost immediately or very quickly that somebody that had been trading for 40 or 50 years had to have developed over that time. So along with the signals and patterns, or the signals, there's about 6 or 8 patterns that you want to learn. And these are nothing more than what human nature does time after time. And that's why they are patterns, because we can recognize when things are happening in human nature, and that's going to be put into a graphic depiction on a candlestick chart. So if we're looking for our moving averages, you'll see that my charts are relatively simple. We've got the 200, the 50, and the 20-day simple moving average on the charts. And that's for one easy, simple reason. because every major money manager around the world uses those moving averages to make their decisions about their portfolios. But here's the one that I tell people we go too fast to try to take notes in these sessions. But if you want to write down on something, the 8 exponential moving average, which we call the T line, that's probably going to be one of the best support and resistance indicators for a trend that you're ever going to come across. At least it has been for me after trading for 40 some odd years. So moving averages have truisms. For example, if a moving average support is breached, it'll also come back up and be tested to see if it's going to act as resistance. So when you see a trend and it falls through and we can start seeing buy signals, where do we think our next target's going to be? Coming back up to test the moving average to see if it's going to act as resistance. Now, when I say see if it's going to act as resistance, we can see immediately what type of signals are up here. They're dojis, little hammers, hanging man, or little hanging men, which tells you there's indecision up here. And where does this occur? When our stochastics have gotten back up into the overbought condition. So it becomes very simple. If the next day we see they start trading it off, failing the 50, we know it's time to take profits. Oh, that's big trouble if you don't have charts. You might have to log off and log right back on. Or there is a button somewhere that will bring up the screen for you. Yana, can you help Ver with that? So now, when they fail up here, what do you think the next target could be? Back to the 200, except notice when it got back to the 20, we started seeing a bullish harami and bullish confirmation that the uptrend was going to come up again. And what happens when it comes up the second time? Well, we can see graphically that there was no resistance here at the 200-day moving or the 50-day moving average. So now it becomes that very simple rule in reverse that if a resistance level is breached, then they come back and they'll test it as to see if it's going to act as support. And we can tell immediately it's going to act as support because they did a bullish harami. And a bullish harami is where they open it at or above the previous day's close, and they close it below the previous day's open, which in Western terminology is called an inside day. And in candlesticks, that's a harami, which basically tells you the selling has stopped. So if they open up positive the next day, we know exactly what's happened. They've come back or come up through the 50, acted as support. We can be buying much more aggressively on the next move. If we have an uptrend and we see one of our signals, like a shooting star, occurring right at the 50 and it opens lower the next day, tells us exactly what happened. They use the 200 as resistance. Once again, once they came up the second time, we can see they did go through. Now here's the T line. The T line is this black line. The red line is your 200 simple day moving average. The blue is your 50-day simple moving average. And the gray line is your 20-day simple moving average. It's usually going to be the 200 and the 50 that's going to get most of your attention because that's where all the big money managers are using, they're making their decisions. The 20 usually becomes more proficient after an extended trend. But this black line is the T line. Very simple rule. If you see a candlestick buy signal and a close above the T line, you can stay long as you don't see a candlestick sell signal and a close below the T line. And there's a caveat to that. The further away you move from the T line, the higher the probability it's going to come back and test it. So that always becomes your first target if you start moving away from the T line. So notice what happened again. Came up through the 50 this time with a candle that told us there was no resistance at the 200. Came up, had a sell signal. Where do you think the sell signal was going to take you? Back to the T line / 200 moving average. How to get the T line? It's the 8 exponential moving average. The others are simple moving averages. The T line's the 8 exponential. So once it came up through, came back, tested the resistance level or the resistance level to see if it's going to act as support, which it did, told us that our uptrend was in progress. This also creates a pattern we call the blue ice failure, which was named by my late friend Dave Elliott of Wall Street Teachers. But if you can see that a moving average is acting as support and they breach it, when they come back up and they fail, his explanation was they fell through the ice. They come up, they try to find the hole they fell through, they can't find it, so they drown and they go to the bottom of the pond. That's a blue ice failure. Now, I know some of you have heard this before. I would always help them out when we did our presentations around the nation together to help people remember the blue ice failure. I always would step up and say, how do you catch a polar bear? Well, you cut a big hole in the ice, and then you spread a can of peas around that hole. And when the polar bear comes down to take a pee, you kick him in the ice hole. Not a very technical explanation, but they always remembered the blue ice failure. So now they go to the bottom of the pond, and we can see what happens when they hit the bottom of the pond. There's our big, huge morning star signal. And when we start buying immediately, if we saw this type of day and they close back up on the 200, everybody, you can imagine everybody on the TV commentators are telling us how bad things are. Next day, if we see the pre-market futures are positive, we're buying charts that look positive or doing reversal signals immediately because we know exactly what's happening. They're going to create a buy signal down here. And what's our next target? Back up to the 50-day moving average. So your entry would be on the crossover. No, don't use crossovers. I just use the moving averages. The number one criteria for buying and selling is the signal. Everything else is just confirming indicators. So if the moving average, let's say, again, where's our T line? The T line's up here. Remember, the further away you are from the T line, the higher the probability it's going to come back and test it. So we're buying down here on the basis that they're going to come back up and test the T line, which is going to create a morning star signal. And then our next criteria is to see whether it can get through the T line. Now, if you're right close to the T line, yeah, you wait for it to close back up above the T line before getting back in. I am using a 1 hour chart. Should I use a 4 hour, 50-day for reverse version to the mean? John, that's a nice thing about candlestick analysis. The charts are, you could be looking at a 1 minute chart, a 10-minute chart, a monthly chart, weekly chart. They all look exactly the same. They all have the same criteria on there. So you can put the charts based upon what your time frame that you're trading. What is the ideal time frame? That's up to each individual, depending on how fast or how slow they want to trade intraday or weekly or monthly. Or I'm a swing trader, so I use the daily chart. And then when the daily chart starts getting too far out of whack, too far away from the T line, then I flip to my 10-minute chart, and I'll explain that as we go through. So downtrend, and we can see a buy signal and a close above the T line, and it breaches this downtrend. Where do you think our next target is going to be? Up here at the 50. Do we know if it's going to break through the 50 or not? I have no idea until we get there. And then what happens? A shooting star, a sell signal, confirmed the next day. We want to take profits. And what do we want to do then? We want to go short because what's our trend telling us? We're still in a downtrend and they couldn't get up above the resistance levels. So it just provides a much more clear format, especially if you see a sell signal at a resistance level and your stochastics are in the overbought area and they confirm the sell signal the next day. Again, this is based upon what human nature does time after time. The probabilities are you want to be going back short again because they failed up here and you're still in the downtrend. How do you define a price action as far as from the T line? Just visual. You'll be able to see how close or how far away you are from a T line when you start seeing it moving away from the normal trading range. And we have some charts, Moneyball, to show that. So most of the time, moving averages act as magnets. Why is that? Because if you're a major money manager and you've got to buy 450,000 shares of this stock and you like it, but you can, right now you decide you're going to buy, what are you going to wait to see? You're going to wait to see whether there's support at the next major support level, which in this case is probably the 50. And when it gets back there, do we know if it's going to support or not? Because of the visual analysis of candlesticks, we can see there was a morning star signal. We can start buying here because it showed exactly what was happening at this level. So we're looking for the target of when to buy. And then when they break out through this downtrending channel, it confirms we're in the next uptrend. Moving averages are a quantitative measure of a trend line. I don't know. By T-line, do you mean, no, the exponential moving average. T-line is T-line is just short for trigger line. That when we see a buy signal and a close above the trigger line, we start buying. I never actually receive a copy of these sessions. All right, you should, Jim, get a copy. Trend lines, yeah, are drawn by when you can see a bunch of, where you can draw a line right down through tops or bottoms. This works for everything. Candlesticks is not a measure of a market or analysis of a market. Candlestick analysis is the graphic depiction of human nature. And whether you're trading stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it, that's all candlestick analysis does for you. And because human nature is the most consistent indicator in the world, it works the same time after time. Okay. My stochastic settings are 12-3-3, and there's nothing magical about that. When I first started learning candlesticks 40 years ago, I just went back through and logic said, if this is the peak, then what stochastic settings represent that peak? And if this is the bottom, what stochastics? So I played around with it for a few hours, and 12-3-3 for me, because I'm a swing trader, meaning my trades are going to last 2 to 10 trading days. That worked out well for me. Then again, that's nothing set in stone, just has worked. Do these moving averages work well as well in the Forex? Probably. And again, the nice thing about the charts is we know, number one, that the signals and patterns work. If no matter what indicators you put on these charts, and again, as you see, mine are very simple. It's a very simple concept. If you happen to see a candlestick buy signal in the oversold condition, the Japanese rice traders say the probabilities are pretty strong. You're now in an uptrend, or it's converted to an uptrend. So all we're using is the information that's built into candlestick and adding other indicators. And if somebody tells you to add something to your candlestick chart, at least you know the basis of your candlestick charts work. And if you can add anything that improves the probabilities of those charts working, add it. And if you test it for a while and it doesn't work, take it off, because you still know the basics are going to work. So again, if I see a buy signal, I can stay long until I see that sell signal and a close back below the T line. And once that happens, what's my next target? Probably the 50-day moving average. If the 50-day moving average doesn't hold, now it's the 200. In this case, they took it down big. I forget what, this was one of those flash crashes. And we started buying. Where do you think our next target was going to be? Coming back up to see if the 50 was going to act as resistance or not. And if we get back up there and we can see there's a bearish harami, which tells us the buying has stopped, they're taking it back down. Where do you think our next target's going to be? Back to the 200. And once we get there, we can see pretty well whether the 200 is going to hold or not. And if it doesn't, what do we know our downtrend's going to do? We're going to stay in a downtrend until we see a candlestick buy signal and a close back up above the T line. And when that happens, where's our next target? Back up to one of the major moving averages. And once we saw we went through the 200, and then we did a doji that just touched the 50, what did that doji tell us? There was indecision between the bulls and the bears at a resistance level with stochastics in the overbought area. If they open it lower the next day, what are we doing? We're closing out any long positions and going short, because what's our trend telling us? We're still in a downtrend. Again, this is not rocket science. This is just doing what the charts are telling us and picking out what would be the next logical target. So if this was a downtrend and all our moving averages are gone, where's our next target? Well, we can see there's a support trend line right here. And when it gets there, what do we start seeing? Indecisive trading and stochastics back in the oversold area. That's a pretty logical place to start covering your short positions at that level. Experimenting with different moving average for a while and not getting charts that look like this. Can you give us the specific settings that you've dialed in for these averages? I don't know. All I know is that's a 50, that's a 200, that's a 20, and the black one is the 8 exponential moving average. Don't know how you can do anything more different than that. All right, again, the T line. T line, anytime I see a candlestick sell signal or close below the T line, I can still stay short. I can see what's happening at the other major moving averages. But remember, I still have to see a buy signal and a close back below the T line. I can see buy signals like a Morningstar signal, but when does it become confirmed? On a positive trading day and a close back up above the T line. So again, we have truisms on the T line, just like you do on the other moving averages. The further away you move from the T line, the higher the probability you're going to come back and test it. So if I've got a trade like this, and then all of a sudden we're way up here, notice how far away we are from the T line. That makes it very simple. At that point, we flip to our 10-minute chart. I don't know if that's the 10-minute chart. Nah. But if I'm up here and I know I'm that far away from the T line, I flip to my 10-minute chart, which may look just like this. And as soon as I see the 10-minute chart, a sell signal and closing back below the T line on the 10-minute chart, I know it's time to take profits, because probably the daily chart's going to come back and test that level. Oh, Frank or Bill, I have to. Every time I buy a car she likes, she claims it. I usually try to buy some to sell, but when she claims it, we can't sell it. So same scenario up here. When we start moving away from the T line, it's going to come back and test it. Same scenarios with the major moving averages. The further away we move from a moving average, the more likely they're going to come back and test it. So moving averages are just like grids on the playing field. They just give us the targets, and we can see exactly what happens at those moving averages. This is what we call the T-line crunch. When we came up here and hit this, notice when they pulled back what they couldn't do. They couldn't close below the T-line. The T-line crunched it through the 50. Where do you think our next target was? Up here at the 200. This is what we call the T-line crunch and the bobble. Very simple pattern. If they come up and they fail at the 50 in the overbought area and start pulling back, we take profits. But notice what also happened. They couldn't close it below the T line. Now we have a left-right combo. That's a doji followed by a bullish engulfing signal, a very strong bullish signal. And where did it occur? Right on the T line. What did that tell us the next day? If it opened positive, we wanted to start buying because it was confirming the signal and telling us the resistance level wasn't acting as resistance anymore. We had an extremely high probability that we were in our next wave to the upside. So we call this the bobble. And when the bobble breaks out, what do we have? We have what we call that J-hook pattern. And if this is wave one of the J-hook pattern, we know the upside is about that same magnitude. What do you mean open positive? If I wake up the next morning and this stock, let's say this, I can't see what the numbers are, but let's say the stock closed at $50 and the market had closed, and the next morning we wake up and the pre-market futures are showing that the Dow is going to open up another 30 points and the NASDAQ up it's not selling off. We're not waking up and seeing that the Dow is going to open up down 120 points. We see that they're all trading up positive and there doesn't seem to be any change in the market trend. That to me is positive. What I don't want to see is opening way down in the previous day's candle, because that tells me the bulls aren't there right now. I don't want to be buying. I just want to be buying because what do we expect from a candlestick buy signal? To see bullish confirmation. That's part of our entry and exit strategies, how to get into a trade with a much higher probability of being in the right place at the right time based upon how they open it after the previous day's signal. The T line is the 8 exponential moving average. Yep. Do you have chart? David, no, not for the patterns. Now, we do have some high-tech products on our website, which is a mouse pad that has the 12 major signals on it. We also have a 2-foot by 3-foot glossy poster with all the major signals on, which I tell everybody that every American family should have one of those in their living room. And then we have flashcards that show you all the signals and patterns and tell you what to expect based upon the probabilities. Do you post to the United Kingdom? Yes, we've got quite a few people in our room from the United Kingdom. All right, so every time we go through this bobble, we expect an upside move. And this is the nice thing about candlestick analysis. Do we always get a huge upside move in one day? Definitely not. But we put ourselves in positions where the probabilities of being in these type of moves are greatly in our favor. So once we saw this move and it got up to the 200-day moving average, what do we do at that point? Flip to our 10-minute chart and see when the 10-minute chart starts backing off below the T line, because notice what happened up here. Not only are we up near a target, but look how far away we are from the T line. That's a good time to start taking profits. Whether you're trading off the daily chart or a 10-minute chart. I trade commodities during the middle part of the day. We've got our options room and futures room. We do both options and futures, and same patterns will occur. There's our little morning star type signal. What's our first target? We want to see what's happening here at the 50, and notice what happened at the 50. Even though there's a little bit of selling, they could not close it below the T line, took it up through the 50, went right through the 200. We knew we were still in a strong uptrend. So basically using the signals and moving averages just dramatically improves our probabilities of what we should be doing. Have a nice little buy signal right here. Double bottom. Where's our first target? Right at this level in the 50. What happened when we got up there? We had a hanging man, harami, and selling. What did that tell us? More than likely, we were still in a downtrend. Get out of that, take your profits, now go back short again. You can analyze each individual stock or the markets in general, which puts you at a great advantage. If you can see that we're in a downtrend, obviously we're scanning for short positions. If we can see the huge Morningstar signal smack dab off the 200-day moving average with stochastics in the oversold area and a close back up above the T line, we're buying immediately. We're probably buying right here because we saw the doji in the oversold area. There's a simple rule of the doji. These are all simple rules that we teach people constantly of what will usually occur after a candlestick signal. If we see a doji in the oversold condition, taking out the added benefit of seeing that it's bouncing off the 200-day moving average, if it opens positive the next day, we're buying immediately because there's a simple rule of the doji. It's going to move in the direction of how they open it after a doji, and that's on any time frame. So we're buying right here, and we know that we're confirmed in an uptrend because they closed it back up above the T line. How long do we stay long? Until we see a candlestick sell signal and a close back below the T line. When they start selling off, where do you think our next target's going to be? back down to the 50. Now, when I say where you think our target's going to be, if it backed off there, we could see exactly what would happen at that level. If we can see that the Dow is in a trend channel, we can see where the top is, where a bottom, come back up and does another top with a hanging man starting close back below the T line. If we know this is a trend resistance, then we could probably draw a trend channel, which means a parallel line would tell us right about in this area we should start looking for buy signals, which we did. Closed above the T line, where do you think our next target is? Back up here to the top of the trend channel. Notice how far away we are from the T line when they fail up here. Where's the first target? Back to the T line. Now, at that point, if we saw them do buying and do a J-hook pattern, that would tell us there's probably a good prospect that they're going to break out through this trend channel. But in this case, they closed back below the T line. Where is our next target? Right back to the bottom of the trend channel. What happened here? That was that big morning star signal. Can you compare simple candlesticks versus Heikin-Ashi? Any major difference or advantage? Heikin-Ashi is kind of a vanillized version of candlesticks, and it's probably too vanilla. You can probably use it more on your longer term trades, but the T line is probably the most effective support and resistance level. And I tell people, if you don't take my word for it, throw it on your charts and just see what happens when you start seeing buy signals and close above the T line, or a sell signal and close below the T line. It's just high probability. I used to make good money. Now, this is starting back when I was a stockbroker for 8 years when I came out of college. And I've got the honor of saying that I was probably the worst investor in the world, and I was even a stockbroker. I got out of the business and went and renovated property in Atlanta, Georgia, bought houses, renovated them, and resold them. And then somebody dropped candlesticks on my desk, and it took me months to pick it up and look at it. But I had somebody badgering me because I knew I was a stockbroker and I should be able to analyze this stuff. Well, when I finally picked it up, I said, well, this makes sense. And the more I looked at it, the more sense it made. So I made good money. I mean, I went from contributing to the market every month to start pulling money out of the market every month. But then when one of my private training students showed me the T-line, which he'd researched, and I started using that, not only did I make good money, but I make fantastic money now because I know the probabilities are greatly in my favor. I'm going to be in the right direction at the right time. The 20-day moving average usually works more effectively once a trend has been established for a while and they don't come back to the 50. They'll start using the 20 as a support and resistance level. So again, here's kind of the different patterns that we can see. This is what we call a McMuffin. This is our morning star signal, which is the T line and the 20. The T line is the black line. The 20 is the gray line. The T line is just the 8 exponential moving average. And the way I describe it is, because nobody has the T line on their charts, it doesn't act like a magnet like the 50 or the 200 or the 20. So because it works so well, it's basically like a human nature Fibonacci number, or a Fibonacci retracement, like Fibonacci has its natural retracement. So the T-line acts like a natural support and resistance for human nature. So when you apply that on top of candlestick signals, which are the graphic depiction of human nature, it becomes a very powerful a combination. Again, putting you in the right position at the right time. The green line is what we call the 3T line, which becomes more effective, and that's a whole different process. That the further away you move from the T line, the more critical the 3T line, the more credible the 3T line becomes. So here's a morning star signal in the oversold area, and this is what we call a doji sandwich. A doji sandwich is a bullish day, a doji. And what's our simple rule of the doji? It's going to move in the direction of how they open it after a doji. So usually that day is equivalent to that day, or the doji is sandwiched in between. And so when you combine the Morningstar signal and the doji sandwich, or a morning sandwich, that's called a McMuffin. And the results of that are usually a very strong price trend. So that concept of the doji sandwich is you're up here now at the resistance level, and they do a doji at indecisive day. And what's our simple rule of a doji? They're going to move it in the direction of how they open it after a doji. So if they open up positive, what's that telling us? They're probably going to move positive, somewhat the same magnitude as that day. And number two, it's telling us the 50 is not going to act as resistance. We've got a lot more upside. Do you use options or stocks when going long or short? Both. I've got my little trading account that I trade options and futures. Then I've got the bigger accounts that I trade mainly the stocks. Yes, you can trade again the forex using these signals. Again, I tell people, don't take my word for it. These are patterns that work time after time. Just start watching them and see if they work. The 3T line is the 3 exponential moving average, and we use it again when it moves away from the T line, and it also confirms when the T line is being breached. If the 3T line comes up through, that's an additional confirmation. And that's all you do is put the 3 exponential moving average on your chart. Okay, let's see. I hope we're not going to, maybe we will get done close to being on time. So there are patterns in the markets or in any trading. This is what we call a fry pan bottom. You couldn't trade this one way or the other if you wanted to, but notice what happened when we got back up here. They broke it out. And what do we expect coming out of a fry pan bottom? A very strong price move. And how long do we hold it? Until we see a candlestick sell signal and a close below the T line. Now look how far away we've moved from the 50. So when we start selling below the T line, where's your next target? Probably back down to the 50. Now notice what happens. We start seeing buying down here, and they close with a doji sandwich back up above the T line after bouncing off the 50. This is what we call the J-hook pattern. And the prerequisite for a J-hook pattern is a very strong price move, and then a pullback, and then the wave 3 is usually going to be the same magnitude as wave 1. So we can take advantage of the classic pattern or the fry pan bottom, strong breakout, but then we're also set for the next pattern setup, which is the J-hook. This is why we call it the classic, because this is usually what happens, that even if we missed this, but we saw this buy signal, we recognize this, we could at least target that this move right here and this move right here are going to be approximately the same, which does two things for us. Tells us whether this next move is worthwhile. If this obviously is a 40% move, yes, that will be a worthwhile move. Or if this is a 12% move and we've only got 2 weeks till option expiration, there might be very strategic spreads to buy one and sell the other at the resistance level. If we see a buy signal when we're buying and it fails up here at the resistance level, where do you think our next target should be? Probably back to the bottom of this trend line. And when it gets there, we start watching to see if it's time to start taking profits because they could be bouncing it back up. Again, this is not that we expected to go there or it's going to go there. Is we kind of watch to see once it gets there, what type of signals we have at those levels. Yes, the 3T and the 8, the the T line and the 3T line are both exponential. The others are simple moving averages. Payment, I used to trade the E-minis off a 1 minute, 3 minute, 10 minute chart combination. I don't know whether I've got some charts on here. I trade gold, cotton, crude, the dollar, live cattle, live hogs. during the day, and I'm usually trading off the 10-minute chart. And when I get ready to execute, I'll flip down to my 5-minute chart. And then when I'm ready to put on the trade, I'll see what the 1-minute chart looks like to make sure everything's moving in the right direction. So this again is what we call the bobble. Notice Win had a kicker signal. This is your strongest reversal signal. Where was our first target? Up here at the 50. We started taking profits because it failed here. And we started buying back here because this was our bobble pattern. Hit the resistance, came back down, and went back through the second time for more upside. At the same time, this is where we started taking profits. At the same time, we were buying BABA because this was our little inverted hammer, gap up. This is what we call a left-right combo, which is an indecisive day followed by a bullish engulfing. Where was our next target? The 200, or I'm sorry, the 50. Why are you not trading stocks? I do trade stocks. We've got 2 chat rooms. One is major. We've got about 170 people in our stock trading chat room, which is, again, most of the people learning how to identify the signals. And then we've got our futures and options trading, which is a whole different vocabulary. So I trade all of them. So once it got up here to the 200 or the 50, what happened here? We have a doji. What do we want to see from that point? That doji, they took it through. Then what happened? They used the 50 as support, went to our next target. So this, again, this just kind of provides targets to where we should be getting out of position, taking profits. So if we see a pattern with a buy signal, where's our target? There's nothing up here. Well, we can use everything that everybody else watches. First of all, there's a gap up here. That could be your next likely target. So when we're buying right here, what's our first target? Well, our first target is right up here, obviously at the 50. And when it got through the 50, that tells us that's not going to act as resistance. Where's our next target? Again, it could be up here at the gap. But things don't go straight up. This is where you can throw your Fibonacci retracement numbers on. Not that these have become targets, but we'll be able to see that once it gets up to one of these levels and we start seeing a sell signal, that was where the first place to start taking profits was going to be. In this case, it came up, did a little evening star signal. What's that tell us? They're going to pull back. And where are they going to pull back? Back to our T line. What happened at the T line? If we got out of our position here, we're getting back in here. Why are we repurchasing? Because that's a J-hook pattern, and now what becomes our next target? The 200-day moving average. Apple, very easy trade, broke through here. First target was the 200-day moving average. When it got up there, what did we see? We saw sell signals. Went short. Where was our next target? Back down to the 50. It didn't hold the 50. I don't know whether we stayed short after that. So if we see that there's a resistance level and a channel, or we can see now that this is a kind of a wedge formation, we know that they start selling here. Where's our next target? Either the bottom of this channel or back to the 200-day moving average. Now, again, that's the targets. Will it get there or will it stop there? We have no idea, but we have the advantage with candlestick signals to see what type of signal could be occurring at those levels. So let's see. Oh, that was Netflix. There was that wedge formation. Then notice what happened. Let me go back here a little bit. We did get right back to the 50. So was it going to support here? Didn't look like it, except the next day they did a big bullish engulfing signal right at the bottom of this trend channel that if we'd been short, we're now covering. And then if we have a buy signal here, what's that tell us about this level? If they go through here, they've broken out of the wedge. We held that for good trade until we saw that sell signal and it closed back below the T line. If we see that slow curve, this is what we make a tremendous amount of money on. This little slow curve, kind of a small fry pan bottom. And notice what happened right at the breakout level. It broke out. And where was our target? Up here at the 200. What happened up here? We could see there was indecisive trading, a lot of dojis, and then a bearish confirmation. We started shorting, especially when it came down through the T line, because what happened up here? We had sell signals, and then there's our bearish doji sandwich. And what's our expectation of a bearish doji sandwich? More downside, especially if you're below the T line. So we're looking for it to come back to the 50. And when it gets down here to the 50, we start watching to see if that's going to be where they start reversing and take it back up. There's that slow curve. Now, remember, we've just gone through a whole session saying you want to buy a candlestick buy signal in the oversold condition, and you want to get ready to sell if you see something in the overbought condition, except for a pattern. If you can see there's a pattern, they're usually going to break it out when stochastics are up in the overbought condition. There's your J-hook pattern. So we're buying right here with great confidence that this pattern is going to have a slingshot effect to the upside. There's that slow slingshot effect. How long do we hold it? Remember, the Japanese race traders have very simple techniques or analysis. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. And that used to be me. And that's what turned me around 180 degrees, is I could graphically see that I was always the person buying up here because everything sounded great. And I would always ask myself, how come when I bought, it immediately turned around and went the other way? Or how come when everything was so crappy and I sold, immediately turned around and went the opposite direction? When I knew graphically, or I could see graphically where I was the stupid buyer or the stupid seller, I can start saying, all right, then I should be seeing a reversal if they've gapped it up in the overbought condition, because that's the exuberant buying. And that's where I start taking profits instead of being the last person in. So there's our fry pan bottom. There's our little bobble. I think right here I had this on here that at that level, oh, that was I don't know why I had that on there. But when it broke through here, what's our next target? Probably up here at the 200-day moving average. Once it got up there, we start watching, see what type of signal or pattern. Well, they blasted right through it. Then notice what happened up here. We had that doji gap up in the overbought condition. We have a very simple rule that if you see a gap up in an overbought condition, start watching for selling. So the next day when it sold off, we were taking profits because where was our next likely target? Back to the T line and the 200-day moving average. Your bobble equals several spinning tops. Oh, just when they hit a resistance level and then they pull back indecisively, they can't get below the T line. That's our kind of our bobble. It's kind of bobbles in there. And then once they come back up through the resistance level, that means they're heading for the next target. So if I know where my resistance level is, the advantage again with candlesticks is every trade we do isn't going to work. As a matter of fact, that's what kind of saved my bacon many times. It used to be when I knew I was so smart that when I analyzed something that should go up before candlesticks came along, it was because my superior intellect said it should be going up. And when it didn't go up, it was because everybody that wasn't as smart as me didn't realize why it should be going up. And that's when I was usually selling out at the bottom. So now I've got at least the mental frame of mind to say, all right, probably at least one out of every 3 trades is not going to work. Now, the ones that work may only work for 0.3% or 300%. I don't know. I know at least I'm in the right direction. But now that I know that 1/3 of my trades aren't going to work, I know what should happen at a breakout level. There was kind of our doji gap up, then a doji. What do we expect after the doji? If it opens positive, we're going positive and we're breaking out. If it sells off, what's that telling us? They failed at this level, get back out of the trade. Can you take VAR. I've got just PowerPoints up. I'll have to. Let's see. I could probably. I'll ask VAR. Ask me again. When we do the questions and answers afterwards, I'll bring up some live charts that I can look at. Yes, I use stops. The very common sense stops. Remember, you will hear every money manager tell you to cut your losses short and let your profits run. The only problem with that, in the 40 years I've been investing, I've never heard a single one of them tell you how you cut your losses short and let your profits run. There's very simple techniques with candlestick analysis. If this is your candlestick buy signal and it confirms the next day, where do you not want to see it close? Well, the Japanese rice traders say if they close it more than halfway down the candle that told you the bulls are in control, the bears are still in control, you close it back out. There's very simple stop loss techniques with candlesticks. So in this case, if we were expecting the pattern to go this way and it did this, we close out the position because it didn't do what the pattern usually implies it's going to do. So using candlestick signals and gaps are also a great way to improve not only the projection of your targets, but getting great profits. A lot of people say don't trade gaps because you don't know what's going on. Candlestick signals and gaps are your best friends because if you know what the signal is telling you, and then they gap it one way or the other afterwards, you know exactly which way they're taking that trend. So a lot of gaps get filled. Not too long ago, when the market took a big downturn, we were shorting up here, and when it not because we were any great wizards or we thought the market was going down, we just thought it was going to go back down to the bottom of the trend channel. And once it got to the bottom of the trend channel, it didn't hold. So what became our next target? Well, there was a gap over here that needed to be filled. So we could stay long until we saw them fill that gap. So again, were we any great intelligence that we shorted on that big down move? Definitely not. There was a bearish harami right here at the resistance level. And if they sold it back below the T line, they were going to come back down and test this level. That told us also, if the market was turning down, we could find charts that were failing. There's a bearish harami and a close below the T line. We started shorting PBYI. Where was the target? Well, here was our first target right here. Went through that. Here's our second target, this downtrending channel. And once it got to that level, whoops. Now we had a doji in the oversold area. And what do we know about a doji? It's going to move in the direction of how they open it after a doji. So we're ready to start taking profits on our short position if it opens positive. The fact that they open it and traded down below that level, now what's that telling us? That this was not going to act as support because we can see exactly what the candlesticks were telling us. Now what becomes our next target? Nothing down here. We're in the oversold area. So what becomes our next criteria? Waiting to see when there was a candlestick buy signal and a close back up above the T line. Same scenario, we shorted this one. There was kind of our left-right combo right here at the, you can see they failed at this level, rolling it over. There's our bearish slow curve, and there was a slingshot effect to the downside. Again, this is not rocket science. Human nature works in prices the same way time after time. If we were looking at this one, which we were, but if it opened positive and started trading positive, well, there was our bobble. Except for the fact that they did a bearish engulfing signal that even if we bought on that day, we would have been back out. That would have been, again, cut your losses short. Now we've got a left-right combo at the resistance level. If it opens lower the next day, what's that telling us? Number one, it's confirming our left-right combo, bearish left-right combo, and two, telling us the T-line's not acting as support. So we failed the bobble, and now we're going back short again. Probably back down here someplace at the bottom of the trend channel is our next target. You can analyze the markets the same way. The failure, Then we start watching for a reversal when we start moving too far away from the T line. I guess they did bounce it up, but then what happened at the T line? They failed again. So now what do we have? Now we have that bearish J-hook pattern that was in progress. So bearish, there it was. That's what we were expecting, is more downside. So it just kind of gives us a much more clear indication of which way the markets are going. And if that's the case, if we know the markets are heading down, obviously we've got, once you set up your scans, which our scans are on Thinkorswim, Ninja, TradeStation, all our formulas are there. Metastock, Warden Brothers. Once you can analyze which way the market's going, now you put the probabilities in your favor of being in the right position at the right time. If we're thinking we're heading in a downward direction and we see something that's failed at the 50, where's our next target? The bottom of this trend channel. We can be short, and all it really does is puts us in the right place at the right time. So notice how far away we are from the T-line on Cray a while back. We start taking profits, and then if they come back below the T-line, where's the next target? At least we know if we're shorting down here, if we see it support here, at least we're out with a small profit, and then we see whether they bring it back all the way down to the 200-day moving average. It just gives us things to watch to see where something's going to happen. Bearish engulfing, left-right combo on hogs and the overbought conditions, stochastics heading down. At least we know our target is down in this direction. Or you can put your Fibonacci numbers on to see if one of those are going to be the target. This is the Dow right now. This wasn't a true reversal, but notice where it occurred. Right here at the bullish Harami before. So what do you have here? You have a double bottom. And then what happened the next day? They closed it up above the T-line. Where do you think our first target is? The 50. Then what happened here? Was this going to be a reversal and head back down? Well, they did take it down hard, and everybody was getting squeamish, but our analysis on our chat room was wait to see whether they close it back up above the T-line, which they did. Once they did that and they closed it up here, what's that telling us? The T-line was acting as support. It had kind of a little of a bobble. They took it back again a couple of days ago. Couldn't close it below the T-line. So what did this tell us? The 50 was now acting as support. This is where it kind of closed today, a little bit above that. So where's our next likely target? Up here at the 200. So what's that tell us? Even if the market was lethargic, and that's what I was commenting to our chat room today, was saying that they were commentating on CNBC News and those places that the market was relatively flat, waiting for the jobs report tomorrow. So there wasn't really much going on in the market. However, we had the capabilities. We were trading gold for a while because look at the big fry pan bottom. And even out of the fry pan bottom, notice what happened. They came up through the 50, came back, did a bullish Harami as it supported on the 50. Where was our next target? Right up here. What happened when they got to the 200? They went right through, which is expected out of the fry pan bottom. There was our target, the beginning of the fry pan bottom. So we've been long gold, except for the last couple weeks, it was waffling. And we've just been telling people in the futures room, stay out of gold until it breaks through. Our buy stop today was at 125.20. When it breaks through there, what do we have? You can see the big classic pattern, the fry pan bottom, strong price move, pull back. Notice they couldn't close below the T-line. And now this little resistance level is broken through. We're kind of expecting this type of price move, the same magnitude as this move right here. So that, oops, skip a couple. That we've been long Nugget, both in the stock and the options, making very good money with it. Now, again, this is on a day where the market didn't do anything. We can see the pattern in whiting is one of the oils that we follow. When it opened positive day, notice we had dojis that close above the T line, positive move. Our criteria was if it opened positive today, where was our next target potential over the next couple of days? Back up to the 50. Well, it did that in one day. I think it was up 23% or something today. We were buying calls right on the open, which worked out very well. Not because we were any great stock pickers. This told us that they had reversed this, broke this downtrending channel. More than likely, they were going to take it back up to the 50. We've been buying FXCM for the last few days. Notice that slow curve, and they broke it out. Where's the next target? They could take this all the way back up to the recent highs, which gives you pretty close to about 100% move on these. These are all daily charts. Yes, but they could be a 10-minute chart. They would all look exactly the same. So here's a situation that being long here, and you saw it way up here. Again, notice where we are, that far away from the T line. That means we've moved too far away. That's where you flip to your 10-minute chart and you start taking profits. Because when we want to sell, we want to sell on a candlestick sell signal. Except that candlestick sell signal would have taken away that much profitability out of that trade for us. Knowing that we're that far away from the T line, our analysis now becomes, what's the 10-minute chart telling us? It's tied to take profits up here. And what's worst case scenario when you sell, when you see a sell signal and it close back below the T line? Worst case scenario is it turns around and you could always buy it back if it heads back up. It tells you they aren't selling it off. So we're in lots of the gold stocks. Look at CDE, had a nice little fry pan bottom, came up to the first major target. Notice what happened when it got through the 50. Came right back to the 50, used it as support, gapped up off a doji, told us there was our next target. And notice what happened here. We had the T-line crunch bobble. So we're still long this one because if this is wave one, wave three is going to be up here someplace. I think that's about all I got. So I'll be glad to answer any questions people have. But before we do that, I guess Pat has done a we've got all this more more explanation on how to use the targets. I think she said we usually sell this CD training for $147. We're selling it for 17 buckaroos. So the reason for that is when I first started learning candlesticks, there was nobody out there teaching candlesticks. Oh, okay. Yes, that was the link. And I would rhetorically ask people, why isn't everybody using candlesticks? It just makes so much sense. And the answers were, there was too many signals to learn and they didn't always work. And I always came back to the simple analysis that if they didn't work, we wouldn't be looking at them today. There's one simple rule on Wall Street. If something doesn't work, it disappears very quickly. So I started learning and so the reason, so this is a long dissertation to say, the reason we're putting it out for 17 bucks is we're convinced that if you spend 17 bucks, 3 Starbucks coffees, and learn how the signals work at these support and resistance levels, you're going to see there's a great deal of logic. And the basis of this logic is prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's all candlestick analysis is the graphic depiction of what's going on in human nature. Where can we get the wall poster? If you go to my website, www.candlestickforum.com, and go to products and services, it's there. We've got probably about 40 or 50 training videos on entry and exit strategies, how to set up common sense stop losses using candlesticks, how to scan for the best trades. It takes, if somebody's a novice and once there's scans are set up, it'll take you less than 20 minutes each afternoon to find the best trades for the next day. We also have videos on which patterns or which option strategies to use with specific patterns, when to set up your spreads, when to do a credit spread, when to do a uh, debit spread, credit spread. Is this $17 sale price or regular price? No, this is the sale price. The video is usually, I think, $147. Oh, I think our scans are already up or on Thinkorswim. The videos, yes, it's a I forget, an hour video on how to use the a little bit more detailed on what we did here. Yeah, we have other videos. We've got the 12 major signals, that whole package. That's kind of the bread and butter of candlesticks. I've written 3 books. The first one was published by Wiley & Son on profitable candlestick trading. And then the more meaty one was the second one I wrote, which was high profit candlestick patterns. And then the third one, which is important for everybody that's investing, is I discovered that even if you know the signals and patterns by heart, then the other big bugaboo that most of us have is our own emotions that you have to, and so it kind of describes how to use candlestick signals to get your emotions out of your trade. Oh, I think the video's like might be 2 videos. I'm not sure, but it's at least an hour long. Oh, what are the scans called on TOS? I'm sure it's the candlestick something or other. It's all we work with them for months and all our formulas over to them. Oh, Bruce, I don't do a lot of promotion at the ends. I figure if I can show people what makes good sense and it hasn't convinced them to kind of take a look at it, that there's not going to be anything I can say that's going to make them rush to buy it. All I can tell you is for 17 bucks, you're going to get a heck of a lot more money than your money's worth, number one. And number two, it might start giving you much more clear insight as to why candlesticks seem to work. And again, if they didn't work, we wouldn't be looking at them today. And the Japanese rice traders that developed it didn't become wealthy from trading off of candlesticks. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. Is this offer for a book or a video? A free it's a download. All you have to do is going to download to you immediately. James, I don't know what the scans are called in there. I never used them over there at TOS. I think they will send out everybody that's registered in here will get a copy of a link to this again. Yes, Nancy. We've got, as I say, right now, we usually have about 175, 180 people in our trading room, which is good for the fact that we've got a lot of people in there that know how to scan for the right stocks. So it gives you a supply of stocks to look at. And number two, if you have questions in your learning process, people are in all stages of the learning how to use candlesticks. So if you have a question, you just put it in there and you're going to get the answers. Plus, I come in 2 or 3 times a day into our chat room. Usually spend about an hour and a half around lunchtime going through all the charts and what the market is doing. But I put out 2 or 3 stock picks every day. Not so people have stock picks, so they can see on the video what the rationale and what the signal and pattern was that made that a recommendation. We do a training every Monday night for the members where we go through all the commodities, all the currencies, all the stocks, which patterns are working. which direction the market is likely to move, which sectors are moving. Fortunately, we've been in the oil and the gold sectors here for the last couple weeks and doing very well with it. Next month, it might be the trucking stocks and the banks, but we can come up with that just based on simple scanning techniques. Thursday night is free for everybody. We do an open chat for everybody to come in, and you can kind of get a feel for what we do during the week. So there's a chat room open every day. We also have the option futures chat room, which again is more specific, obviously, for option strategies on stock moves and which futures to be buying or selling. What are the scans? Oh boy, I don't know what the names of them are. They I would check under the name Bigalow or Candlesticks. Do you trade Forex using your candlestick analysis? You can. I don't trade Forex. I trade the currencies outright. But if I think the Dow, or I think which is a lot easier for me, if I think the dollar's heading up, I buy the dollar. If I think the euro's heading down, I short the euro. It's just one video. You don't need instructional manuals. Everything's right on the video. Well, let me see. If you just click on that link, it will tell you everything that's in that 17 bucks. What is Thursday night? Thursday night is here in the Omnovia room. You come to my website, candlesticksforum.com, and you just click on stock chat, and that will show you how to download and get in. It takes about 30 seconds. And then, yeah, you can ask questions like you are in here. I go through probably the first 45 minutes. I'm going through the presentation as far as all the charts, and then the next 45 minutes, everybody's asking about specific charts, and we analyze each one. I use Thinkorswim myself. How do you register? You don't have to register. Just go to the website and find the free free chat link. 8 o'clock Eastern time on Thursdays. Yes, all the moving averages, everything that you see on a regular chart. This could be a soybean 10-minute chart. This could be a 1 hour coffee chart. They all look exactly the same. The only thing that would change up here is what the time difference is. Oh, I don't know whether it's going to go away real fast. It shouldn't be a high. We're trying not to make it a high decision. For 17 bucks, as I say, you'll get more than your money's worth. Are these time frame independent ideas? Are these time frame independent ideas? I don't know what that. Usually, I'm putting out ideas based upon a swing trade type setup, meaning anywhere from 2 to 10 trading days. But then you can take that information if you're a day trader. If we're recommending Apple on a positive open tomorrow and you're a day trader, you probably want to be day trading off the 5-minute chart in a positive direction. Okay. No, a lot of people don't ask for the PowerPoint one, but if you email Abraham at candlestickforum.com and just say I'd like to have the PowerPoint of tonight, just let them know that you've got it here. And we'll send it out to you. All right. Okay. Whoops, I'm not scrolling fast enough. Does the stochastics crossover come into play? No. The only reason we're using stochastics, usually a stochastic crossover is going to be 2 or 3 days late, or 2 or 3 time frames later than what the signal tells us. All we're doing with the stochastics is it doesn't make sense for a candlestick to buy a candlestick buy signal if it's in the overbought condition, or sell a candlestick sell signal in the oversold condition. We're looking for a candlestick buy signal in the oversold condition, and we're looking for a candlestick sell signal in the overbought condition. So we're not playing stochastics. We're playing the signals, or we're identifying the signals. We just want to make sure it's in the right condition of the market trend. Oh, I think if you click on it, you don't have to buy it, but you can read what is all in that video, Dave. Abraham, yes, at candlestickforum.com. I wouldn't know if an allocator indicator if it came up and bit me. And I don't need to. As I mentioned before, after being one of the worst investors in the world, just the simple techniques that we use off of these charts, I make an extremely good living uh, uh, each month just from trading off of these charts. If somebody says, oh, you ought to add such and such, I'll add it to the chart. And if it doesn't help any, I'll take it back off. All right. Oops, I kept everybody over time. Yes, I want to keep it as simple as possible. I don't want to be spending 45 minutes, an hour and a half each night analyzing what I should do the next day. I can usually analyze probably within 10 or 15 minutes what the best trade setups will be for the next day. Okay. Well, thank you, Ken. Yes, these patterns, the patterns are in the Metastock plugin. Uh, I haven't traded Forex just because I don't have time to trade Forex and I don't want to, but they work just as well in Forex patterns as they do anything else. Did you ever use DI? I don't even know what those are, so which apparently means I haven't ever used them. And Levy, we have yeah, a lot of people that trade Forex. Again, candlesticks are not a measure of any market. It's the measure of what's going on in human nature, and human nature is what moves prices around. What is your favorite market? Oh, I don't really have a favorite market because right now we're making tons of money with gold. I never traded gold, or very rarely trade gold. As you saw in the crude oil was in a downtrend for months. We made tons of money being short crude oil and crude or oil stocks. Next, and right now, some of the trucking companies or the transportations are acting very well. So I don't have a favorite market. My favorite market is the ones that the candlesticks charts that tell me are extremely strong or extremely weak. Um, let's see, make sure I haven't scrolled too fast. A bobble is part of a continuation pattern. It could be considered a continuation pattern, but you can also see that it's a J-hook pattern, which tells me this is wave one, this is wave two, and wave three is now in progress. Yes, I think gold is going to run very strong because it did come out of that, it's come out of this pattern, and this is your classic. Fry pan bottom, J-hook pattern. Wave three on a J-hook pattern is usually the same as wave one on a J-hook pattern. So we're still very long. AU SA. We started buying SSRI today, which is a more of silver because it broke out of a pattern, a J-hook pattern. Yeah, if you look at the information on a bar chart compared to a candlestick chart, the information on a candlestick chart is immensely greater than a bar chart. Netflix right now is still trading above the T-line. It's getting up close to the 50-day moving average. It's not one of your prolific traders right now. All the biggies aren't trading great. They're just in very slow uptrends. We're making much more money right now in the oils and the gold stocks. So we want to move to where the money is being traded. If we're going to be sitting trading, whether you're trading 10 minutes each day or spending time each day, you definitely want to have your time and effort in the strongest sectors or the weakest sectors. Now, silver, yes, is now starting to move back up. Not as strong as gold, but it's still moving back up. Who can we contact if I got charged 2x for the video? Jason, email Abraham at Candlestick Forum. Let me type this in here. Abraham at candlestickforum.com. Just tell him what happened and he'll get you reimbursed. How do you find what is strong? Very simple. Scans. Remember, we're looking for signals and patterns. I've got a video on the website that shows this. Everybody always asks which ones are the strongest signals or patterns. And you really can't quantify them because they're all fairly strong. Remember, we took the 12 major signals out of 50 or 60 signals of the universe, and they're the ones that not only give you the strongest probabilities and the strongest reversals, but they're that if you understand what created those, you still have a very good understanding what makes those. Yeah, we bought a little bit of AYU. That was a lower price stock. But we have a video that shows you the strongest probability patterns, like the best friend pattern, which is a doji in the oversold area followed by a gap up the next day. Not only a strong probability is going to be in an uptrend, but it's going to be in a strong uptrend. Or the fry pan bottom breakout. If you get caught in one of those, you get a good run with it. Or the J-hook pattern. I mean, once they confirm, we know what the probabilities are. Golden cross on the gold chart. Okay. So anyways, all right. Raleigh, thank you very much for the invite. Thank you, everybody, for showing up. I hope you got a little bit of information. As I say, for 17 bucks, if you don't like it, I'll send you 3 cups of Starbucks coffee, but you're going to get more money than what you're going to get or what you expect. If you're having problems ordering, just email Abraham. He'll get you linked up and get you set up. All right, everybody. Thank you. Raleigh, thank you. Yana, thank you. We'll see everybody in the chat rooms.